Welcome to another housing market update for sunny San Diego. Today I'm going to show you that we are in a strong seller's market and why values will continue to rise for the foreseeable future. I'm also going to share with you why I expect between now and June of this year that the average house that comes to the market in San Diego will sell very quickly, actually within 13 days or less, that the average house will sell above the seller's asking price, and then 3, that the median sales price, which is currently, at the highest levels in history of $1,052,500, will continue to break San Diego's all-time highs as it climbs higher over the next 90 days. But before we get into it, go ahead and subscribe below so you can be the first to learn about San Diego real estate and our housing market. Hey guys, my name's Jesse Morrison. I'm a real estate agent here in San Diego, and since getting started back in 2005, I've helped hundreds of people just like you win throughout the home sale process and add tens of thousands of dollars of profit to their bottom line. So if you're looking to make a move, whether you're 9 days or 9 months out, give us a call, shoot us a text, or send us an email using our contact information in the description below, and we can talk about your next best steps to making that happen in today's market. So let's get into it. The first thing that we're gonna look at are the general trends, right? We're gonna zoom out to see what the San Diego housing market looks like from more of a macroeconomic perspective. That way we can kind of see where home values are trending overall. And the way that we're going to do that is we are going to look at supply and demand, right? This graph here indicates our monthly housing inventory, and it shows us how current economics relate to our housing inventory. So what we do in real estate is we measure supply and demand based off of months worth of inventory. So if there are 100 houses for sale in San Diego County, per se, and on average, let's say 25 houses sell every single month, it would take 4 months of selling 25 houses every single month to deplete that 100 housing inventory down to 0. So at that point, we would say we have a 4-month supply, all right? So the next thing that we need to look at then is when are we in a buyer's market versus a seller's market, right? What we've unlocked is that every time inventory is less than 6 months, we are in a seller's market. What that means basically is there's not enough housing inventory out there to meet current buyer demand. So at that point, sellers are in control, and because not enough buyers have options of homes out there, and so sellers can pretty much make the rules. But when inventory creeps up above 6 months, then we enter into buyer's market. So there's plenty of inventory. There's more inventory out there than meeting the demand out there. So buyers have tons of options, and therefore they have all the control. Well, currently we're sitting at 1.5 months of inventory as of April. As of April 3rd, you can kind of see this date at the bottom here. Therefore, we're in a very strong seller's market. We're deep into this green territory, right? So what we need to look at next then is, what do values do in relationship to the housing inventory? This graph here is the monthly median sales price. And what it does is it shows us values as it relates to our housing inventory. So when we overlay this green onto the graph, this green represents the seller's market, right? This is the time period when there were less than 6 months of inventory. And what you can see is that during these periods of time, the trend of values went up, right? So if you look on the side of the graph, this is the median sales price. So you can see values went from like whatever it was, a little bit over 0.4 million to almost 0.6 million. It went up almost whatever that is, almost 40% or so from this period to this period. It went up again here in 2010, and then ever since here at 2012-ish, we've been on this upward trend. And when we overlay the red, right, this is the buyer's market, right? This is when there was more than 6 months of inventory out there, and you can see that during this period of time, values trended downward, right? When buyers are in control and there's too much inventory out there, prices typically come down. Well, remember, we only had 1.5 months of inventory So at that point, we're in this very strong seller's market, and basically until we reach that 6 months or more worth of inventory, prices should continue this upward trend. So now that we kind of went over where we are on the more of a grand scale, trending upwards, things don't always, go in a straight line, right? They do this. There's going to be periods of time where, values come down, and there's going to be periods of time throughout the year that values go up. So we need to look at, seasonal trends. And what we're going to do now is we're going to zoom in to see how the San Diego housing market, trends from more of a seasonal perspective. That way we can gain insights on, what's going to happen in the next 90 days. All right, so the first thing that we're going to look at is the days to sell, right? The monthly median market time. And what this graph is going to show us is how long it typically takes to sell a house. And my face keeps getting in the way. On this side of the graph are the days on market. And then this is over time, over the past 5 years, right? And you can see, sometimes it takes almost a month to sell, and then, it kind of goes up and down depending on the time of the season. So is there a trend in this? Well, what I'm going to do is I'm going to overlay January to June, this 5-month window. So these green boxes here, this is basically every January to June window of time. So as January approaches June, you can tell that homes typically sell faster, right? Look, we're at a peak here in January, and then as we get closer to June, they sell much lower in a lot less time, I should say. And when we overlay the red, which is the 7-month window as June approaches January, the opposite holds true, right? Homes typically take longer to sell. And the reason why we want to start out by looking at the days to sell is because in general, values go up when homes sell faster. But where are we now, right? We got to look at this 90-day window from right now in April to June, and we can kind of get an insight on what the future is going to hold. So when you look at these yellow bars here, this is the time frame that we're entering into, right? April to June. And you can see that we're at the latter end of the seasonal cycle where homes will, sell the fastest. So in the months of April to June, homes should typically sell at the fastest point of the year, right? So down here is where we're at right now. I would imagine, where are we? It takes 13 days to sell a house right now in San Diego. So moving forward from now until June, it should take 13 days or less for any home, for at least the average house to sell. All right, so the next graph that we're gonna look at is the sale to list price ratio. This is the monthly median sales price as a percentage of the listing price, okay? What it does is it shows us how aggressive buyers are, with relationship to that listing price. Right here is a percentage, right? 100%. That basically says that whenever the graph is below 100%, a home sold for less than their asking price. And so when it goes above 100%, that means buyers are willing to pay a premium for the house and pay more than what the seller's asking for. So what we want to do to see the trend throughout the year, the seasonal trend at least, is to put that green overlay, that 5-month window as January approaches June. And what you can see here, as January approaches June, buyers get more aggressive, right? They may not necessarily sell 100, more than 100% of the listing price every, from January to June, but you can see that they get more aggressive. Buyers get more aggressive. And then during the opposite season, right, from June to January, buyers get less aggressive. You can see here, they peak out in their aggressiveness in June, and then get less aggressive as they get to the following January. So where do we stand in April to June? What's the future look like, right? Well, we're at the end of the cycle where buyers are going to start being the most aggressive for the year. And so what I would expect is that from now until the next June, over the next 90 days, buyers are going to be the most aggressive with their offers that they are all year long. And with homes currently selling at 100.1% of their asking price between now and June, I would anticipate that almost every house that you're going to see listed is going to be selling for slightly more than their asking price. All right, so the next graph here is cyclical values, right? This is the monthly median sales price, and what it does is it shows what season values typically go up, down, or sideways. And I'm not sure if you can see the trend on this graph here, but when we put that overlay on there from January to June, it becomes more clear, right? Values go up they're bottomed out in January and they go up until June, and they pretty much peak during that season. And then that 7-month window from June to January, they either level out, kind of go sideways, or they'll take a dip a little bit, right? This is the time frame from June to the following January, where people start getting scared. They're like, oh no, the market's going to crash, right? Things are going down in value. But they forget to look at those general trends that we just started off with, knowing that as long as supply and demand are in favor of the sellers, like they are right now with 1.5 months worth of inventory, that general trend line should continue to go up. But throughout the year, you can take dips. So you can kind of use this information to, I don't know, time the market as far as like, at least have clear expectations, right? Like if you're in this window here, you got to know that you got to be more aggressive. You got to know that prices are going to be coming up. But if you're in this red bar here, then you can know that, maybe you can be less aggressive with your offers. Or if you're on the sell side, you got to know that you might get less aggressive offers than what you could have got, a couple months ago. But where do we stand from April to June? What can we expect? We can expect, we're at the end of the screen cycle, right? Values should climb. This is the interesting part, though. Right now we are at $1,052,500 for our median sales price in San Diego, which is an all-time high. But between now and June, I would expect that median sales price to climb even higher, right? We should continue breaking San Diego all-time highs moving forward, at least until June. So to recap, right, San Diego is in a strong seller's market with only 1.5 months of inventory. Home values will continue trending up until that inventory exceeds 6 months worth of supply. And from now until June 2024, homes will only sit on the market for 13 days or less, and homes will sell for 100.1% or more of their asking price, and the median sales price will climb higher than that $1,052,500 range. All right, thank you so much for going through the San Diego housing market update with me for April 2024. If anyone you care about could benefit from this information, please make sure to just share this video using the share button below. Again, my name's Jesse Morrison, and if you're looking to make a move, whether you're 9 days or 9 months out, give us a call, shoot us a text, or send us an email using our contact information in the description below, and we can talk about your next best steps to making that happen in today's market. Otherwise, if you're just looking for more information at this time, I strongly suggest that you check out this video that YouTube thinks that you should watch next, and don't forget to subscribe to our channel. Thanks so much for watching, and I look forward to helping.